Boom. Here we go. So, what is going on in crypto today? Not a damn thing. Not a damn thing. We are stuck in a non-trending market. Non-trending. What do I mean by non-trending? Is there's nothing here. You know, if I haven't taught you guys anything yet, this is difficult to be trading wise. And personally, we're going down. We're getting ready to touch support here. We've got a little bit of a green candle right now. I'm on the daily. 12-hour looks the same. 8-hour looks the same. 4-hour might have a small little pump going. 1 hour here is stagnant. You know, not much is going on here. And I believe it's because of the CPI, you know, the inflation report that's going to happen tomorrow. And it's going to be probably higher than it actually is, you know, because they want to say that it's around 8%. And we all know true inflation is around 30%. Look at gas, look at groceries, look at the 99-cent teas. I know this is a coffee mug, but look at the 99-cent teas. They don't say 99 cents anymore. They say like $1.29. I was buying some Reese's PCs or whatever, the dollar candy, and it was 124, you know, so it's gone up. It's gone up like 24%, not this 8%. So I believe price has kind of been priced in. And where are we headed? You can see right here, I've got two little drawings going. Very simple. I'm keeping it simple for everybody because we all know we can either go up or we can go down, right? So if we go up, why am I picking this area right around here of this 27 to relatively, you know, 32,000 range? Well, it's very simple, okay? Because if I look at the volume here, there's really no volume right down here. This is a trade I want to be a part of. I want to be a part of this guy. I want to be a part of this move all the way up. There's no resistance whatsoever between 22,005 and 28,000. We just have to break above. I'm not trading currently because I got stopped out. This is a market that I don't want to trade. I don't want to play this game right here. I want to be a part of big moves, and there's two big moves potentially happening. The one is to the upside. We all want to make money, but the other one is to the downside. And why is the downside important as well? Well, if this darn thing would show you, then we could actually see, because there's no actual resistance here all the way down to, here we go. The reason why I'm picking this for the bottom as far as 11, 12,000, because look at that freaking volume. That is a lot of volume where we're stuck right now. Here's a lot of volume. That's going to play resistance to where if we hit this, we're not going to be in a bull market because we have a wall that we have to break through here. Then here's another wall right around the $40,000 range, right? And it coincides with where the market is. Coincides exactly where the market is. But also on the bottom half, you know, here is a wall for support. You know, that's going to be the floor. There's a lot of volume compared to right in here. So if we break down below this 18,000, well, relatively probably close to the $19,000 range, well, then boom, it's straight down, straight down. You know, yeah, you could say that there is some sort of strong volume in here, right, to catch us at the 52-week low of 17,600. Yeah, we could definitely bounce from there, you know, because the way trading works is things like to be repetitive. They like to touch things a few different times. So, you know, realistically, if I was to look at this, and let me just get this so you can actually see. If I was to look at this and move this guy up here, go in here, and see here, well, we're probably potentially going to touch. We could break down below, touch, and then bounce back up and be in a little bit larger of a range, right, before we go down here and really bounce. Because I really think this is the bottom. 11,000 to 12,000, 13,000, around this range. It might even be just briefly below the 9,000, and that's when we're going to start moving back up, right? But we got a long ways to go before we're actually in a bull market. So this is a lot of accumulation that we need to, because here's that 200 day, right? This is the 200 day that's going to follow. Okay, so we have to have a massive move to get, basically a 50% gain to kind of get back into a bull market. It's going to happen. It's just going to take some time. But as a trader, you want to make money when it goes up, it goes down. So what we're planning on doing is we're waiting, right? Again, I'm not trading because, what's up, William? Just somebody in the chat. Got a one person in the chat, like, heck yeah. And I'm trying to teach you guys here, and, it's not sexy. It's not sexy. It's patient. You want to be patient because, again, if we look back at the time frames, nothing is going on here. If I go to the 15-minute and I, reset my chart here, there's quite a bit more going on. But who in the fuck has time to stick in front of the computer all day long? You don't. You have jobs. You have working lives. You have family. You have stuff you want to do. You can't be just looking at this, ready to hit sell, 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 sell. And I'm telling you, in the longer time frames, the market's not fucking going anywhere. We're staying between 18,000 and 21,000, right? So that's no big move. No big move. Especially if you're wanting to leverage, you want 2 to 5x, and you need to be able to hold on to this stuff for a little while. But I'm not trading because I had a few trades. If you followed my channel, I did have a few trades. I made 400% on my Ethereum and Bitcoin trade, and then I lost 1% of my portfolio here yesterday because we got rejected. I added to one of those trades thinking we could have a potential to break out and go to this 28,000. I was wrong, right? I was wrong. And partially it's got to do with this fundamental of the CPI report being released tomorrow. Everybody's waiting to see what is going to happen there. So tomorrow, expect the market to either pump or dump or do both in the same day, by 2-3%. I see that highly likely for that to happen. This is such a choppy market. It's not something you want to trade in. We want to be patient, and we want to wait for us to break below the support here of close to 18,000 solid, or that close to 22,000. I'm going to go long if that happens, and I'm going to hold it. I'm going to have a tight stop. Same thing on the bottom, right? Okay, we want to be a part of the big moves. That's where I think we're headed, and that's what I'm waiting for. And until something happens, boom. Because in the market and what's going on in the world, it's just bad story after bad story. 3 Capitals is saying it was liquidating because baiting, people... They're coming up with excuses. You have $600 million and you lose all of it. That's just being greedy. That's not good money management whatsoever. You look at a chart of Bitcoin and you think it's going to go parabolic forever. And so this is the downfall of our economy. This is why we're not becoming a world superpower anymore, is because of debt and leverage, right? This cycle has been different than any other cycle because more people have been borrowing more money. Yeah, back in 2017, it's quite a ways back here. I guess I'd have to look at like a weekly chart here to really get to 2017. I'm on Bybit here, so I could change it up here. F it. I might as well change it up here. So, back in 2017, people were mortgaging their houses to buy Bitcoin, and they got screwed. Okay, they were getting second mortgages out, and the market was already at its peak. It was already a bubble right around the $17,000 to $20,000 mark. People got screwed. What's happening now? You've got places like Three Arrows Capital that liquidate 600. You got Voyager. You got all these players that are just had too much leverage on hand. There's going to be more pain. There's going to be more pain. So if you're not a trader, right, then now is just a good time to dollar cost average in, right? A lot of people say you're not going to get rich in crypto. Well, you're not going to get rich in stocks either if you don't play the market as far as timing goes, time-wise. Not trading is you got to have a good entry, you got to have a good exit. It's in and out kind of a thing. It's like speed dating or the app dating that we have here. But hey, welcome from Jamaica. Investing, though, is you don't really give a shit where the entry point is. You just kind of want to buy low and hold on forever. Well, right now, you're buying low. You're buying way low because, again, if we look at where we've been, okay, if I get just a small, relatively, right? We're down 70%. Yeah, everyone thinks that we could go down 82%, which I think is completely likely, right? But what happens in here if you're an investor? You're just everyday Joe that wants to make money in crypto, right? You want to beat your average buddy that's on Robinhood or whatever, is you buy these assets low. And it's almost any asset that you buy low, right? And you just continuing to buy as it goes down. You're not freaking out because it's a good asset. I'm not telling you to buy Shiba or Doge, right? I'm telling you to buy good. Actually, I'm not telling you to, disclaimer, I'm not telling you to buy anything. Just saying if it was me, this is how you make money, is over long term, because this stuff happens over time. Just in stocks, you look at Apple. How far back down is Apple from its all-time high of this year, right? It's down 28%. Do you think Apple's really freaking going anywhere? Apple might go down even further, but here's our good entry points. These are good entry points. But I guess getting back a little bit to trading, I told you guys where I think the market is headed. And we're either going up or down, but we got to break 21,000 a long, 18,000 is a short with tight stop. Ethereum pretty much follows Bitcoin because you can see here I've got alerts on my chart here for both, right? But Ethereum's a little bit different. It's 1,250 relatively is my buy signal, and then my sell signal is relatively under the 1,000, right? Shabba Shah, you got a bot in my chat. I got a bot in my chat. Don't worry about that guy. He's he's trying to scam you. Don't give anybody any money on the internet, especially people that are thinking that you send 1 BC, you get 2 back. Don't do that, right? So this is kind of interesting. What Ethereum is doing currently at the moment is this is called a hammer candle, right? It looks red, doesn't it? This looks red. So red means sell, right? Or stop. Well, truthfully, this is becoming a bullish candle, even though it's red. Why? Because at the top here is when it opened, right? And it went all the way down. And then now the buyers are in control. They're buying, right? So this is telling me buyers are in control of this candle, not sellers on the daily here. We've got 7 hours left. So who's to telling if this guy is going to fill in, right? He could fill in. He could go lower and fill in, or the buyers could still be in control and it could go up and it can turn. This guy could, I guess this is a better way of doing it. This guy could then break above here and turn green. And boom, he could go haywire, right? But that is a bullish candle so far on the daily for me, that's tempting. This is tempting for me to potentially open up a long with, I'd have my stop right at where my support is here, because if I'm wrong, I need to be able to get out of it and then go on. I'm not attached to anything. I need to let go of it. Hey, somebody's going, brah. So Elon isn't going to give you your Bitcoin back. Unfortunately, I'm sorry, brother. I'm sorry. That's not how it is. If it sounds too good to be true, it's too good to be true. Looking at Bitcoin, same thing. Same thing right now, since they're following. This is looking like it's becoming a bullish candle, even though it's red. Okay? Right? Even though it's red, this is looking like it could potentially be a bullish candle. Same thing kind of here. This was a doji. Okay? So it's indecisiveness between the bears and the bulls, right? Buyers and sellers are fighting for control, and the buyers won. So boom, boom, boom. This one that happened above, well, first off, there's a couple different things happening here. Is you can't just completely trade off of a candle, but you can get a lot of information from one candle. Is this guy, man, I have no idea why my drawings are having such a hard time here. I have them like locked. But this guy is right here at this nice resistance level, okay? So that was one thing. And so it pumped all the way up here. This once was a big solid green candle. And then sellers took control and eventually closed below it opened, below where it opened, right? It went all the way down, but then closed right here underneath that support line. So then we had another indecision candle. Boom. Right? Where it was relatively same buyers and sellers, and then that's when we have a fairly solid candle. Okay. But yeah, that's where we're reading. That's where we're reading. If we do find, because it's kind of looking like we're finding a little bit of support right here. Right here. Right around the 20,000 is we're kind of trying to fight some support. This is an interesting trade if you were to take something like that because of the CPI report tomorrow. You know, you're fighting the news, right? You're fighting the news. So you could take something, but if you were, you need to have that 19,000 as your stop is what I would do. And you're basically betting that you take this trade. You're basically betting that, you know, that's still a fairly 1-to-2 risk ratio, which might work. But keep in mind, you'll probably get rejected at the top here. So you'd need to take some profits here. And you could just lose, you know, there's a good chance that you do lose. This is fairly risky, so I don't know if I'm going to take it. I might wait 5 hours or so to see before this closes to see where it's looking like we're opening. If it looks like buyers are taking control, then I might put in a very small position. You know, I like to trade only with 1 to 5% of my portfolio. Something like this, I might even do like 0.5%. So the risk is minimal on something. You know, risk 0.5% to make 1%. That's still a fairly decent ratio because, again, it's 2 to 1. And let's just say something crazy happened, right? Just something massively crazy happened. And this was the breakout that we wanted all the way up to that line. Okay, well, you're risking 1 to make 10. Risking 1 to make 10. That was an epic trade. I would add to my position here, right? I would add once we broke, you know, and I would move my stop. Then boom, 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 to where I'm going to add to that position, right? So if it adds, it works, right? If it doesn't add, then I don't lose any money. The risk is minimized. You never add to a losing trade. That's where people get fucked, absolutely fucked, is because they add to a losing position. They want to hold on to them being right. So if they were wrong and they entered here and price was going down here, they wouldn't get stopped out. And then they would add to the position and hoping it would go back up. Well, usually then it goes down, right? And then watch what happens. Then you're part of one of these moves that go all the way freaking down. And so now, as opposed to losing 0.5%, you end up losing like 10% of your portfolio, if not all of it, and you've got a bad taste in your mouth because probably you would add here, because you're like, it's eventually going to bounce. It's eventually going to bounce. It's eventually going to bounce. That's not how you trade. That is not how you trade. Okay. If you want to invest, yeah, as it's going down, invest as it's going down. Invest here, invest here, invest here, invest here. That's what I'm doing. I invest every week. I put money in every week. I don't touch my trading account. I don't add money to my trading account. I'll take money out of my trading account so I don't get over jealous with it, where I feel like I can just make obscene amount of money. It's just there, right? Okay. But when I take money out of it, I either pay bills with it or I invest with it. That's just plain and simple. Isn't that okay if you're cost averaging though? Yeah, if you're cost averaging, absolutely. Cost averaging is great, but that's not a trading strategy. Cost averaging is not a trading strategy. That's an investing strategy. That's a long-term investing strategy. A trading strategy is trend trading. You know, you could do the sideways action if you want to. You could go against the trend if you want. There's a bunch of different strategies. You could use just pure indicators. Okay, here's a MACD. You know, you could use stochastics. You could use RSI. I don't use a whole lot of them because it just clutters everything. You know, moving averages and everything are nice. You know, these are all nice, but realistically, they give you a small bit of information what's going on. But I'm gonna leave you guys and let me know if this was helpful. And until next time, I'm here to help you guys make some money. So thank you for joining me. And I'm going to be around on the blockchain tonight. So 5 p.m. Eastern on BitBoy's channel. It'll be a good little debate. We have different views. At least I have a freaking different view than most people. So yeah, no. Stops are the most important thing. All right, I guess I will just end with here. Let me freaking delete a bunch of this stuff. Stops are the most important part of trading, right? You know, yeah, entry points, everybody wants to talk about good entry points, but that's not risk management. How you make money is risk management. So if you're looking at a chart, you need to find out where a good stop is. And then you need to look at that trade and find, hey, is there any, resistance in the way? Because that's going to make it difficult. Like this, if you wanted to trade this, right? Well, you've got this resistance here where there's a good chance that it's going to be rejected off of this. So your entry's a little bit here. You need to make sure where your stop is, where your plan is on getting out, okay? On the long side, if I was planning on trading this, well, where's the next resistance? Where's the next resistance I can really see, right? Here, let me move this over a little bit so it's easier to see. Where's the next resistance to this? I'm on the daily, right? Boom, resistance is here. There's not much in here that's going to get in the way. There's not much. You can maybe argue this guy because it got touched and it went down below here, but relatively there's no resistance here. So there I could make my stop probably around the next little level of support, which I would either put my stop down here, or if I wanted to have a better risk management, I could put my stop here. Right? So if I get out, my risk ratio, I open up here because I'm on the breakout, boom. And then if I wanted to be less risky, less risky, well, boom, here's a 2. Oh, I'm risking 1 to make 2.5, right? But if I move this here, boom, jumps up to risk 1 to make 6, right? That's the trade that I'm going to make money off of, is that one. Not this one. But you never not want to have a stop because you lose all of it. You lose absolutely all of it, right? So stops, get this through your guys' head. Stops are more important than entries, okay? You never want to enter a trade that is going to give you a 1-to-1, okay? Because it's just not worth it. Most traders lose. You can lose 70% of the time and still make money if you have trades like this, where you risk 1 to make 7, right? 1 to 7. Don't take dumb deals like this, where here's your, I'll move this here. You take here where there's that resistance in, that's relatively the most you're going to make, and then you have no stop, right? So it's not worth the risk, not worth the risk. Okay, so again, just stops are more important. Everybody wants to talk about making money. There's a lot of people on YouTube that freaking trade with 100% of their account and blah, 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 blah. Guys, trading is a lot like being a tortoise, okay? You don't want to be the hare. Being the hare is sexy, making money, boom, boom, boom. Because I'm sure everybody that has watched this or have traded a little bit, you've gotten lucky. You've gotten lucky where you were on the right side of the market and you make money, right? Trading is about being lucky, but then risking the luck. You want to have risk management with money management skills, okay? That's all it is. And all technical analysis is past performance to help predict future outcome, right? But then again, you have to keep in a little bit of fundamentals and crap of what's going on in the market. I'm digressing, okay? But small little lesson here is that just you got to have risk, right? Okay, and what I mean by being the tortoise is the tortoise, you make money over time. The goal is, okay, I made 6% here. Okay, I lost 1% here. Oh, okay, I made 3% here. Oh, okay, I lost 1% here. Oh, okay, I made 10. I had a really good trade. Oh, I lost 1% here. Oh, I lost 1% here. I lost 1% here. I lost 1% here. I lost 1% here. I made 3%, right? That's how you make money over time. It's over time and being patient. And there's a good trade coming. There's a good trade coming. And that trade, again, being repetitive, is a break here or break here, right? The market very easily could do this for a while because I suspect it does this through the end of July, right? Before we have a big break. But it's not going to keep me from putting a position open in when I see the signal. But anyway, okay, I continue to talk. Anyway, this is, I'm done. I'm done. Out of it. Thanks, guys. You bought Doge at 5 cents. Good for you, buddy. Good for you. Personally, my thoughts on Doge is it's fundamentally, it's not worth anything. You could definitely trade Doge because, Doge is an asset that you could make money off of. But right now, it's like everything. It's a losing asset. But over time, I suspect this guy goes to zero. Most of the coins are going to go to zero. Most of them are going to go to zero. This guy needs a big Elon Musk or some fundamental reason in order to give it value, right? Bitcoin and Ethereum, they don't because they've got a network behind them, okay? And lots of, I guess I can't say investors because so does Doge. Doge has but just fundamentally, it's an old version of Bitcoin. So why would you invest in something like that? Yeah, you could trade something like this, but never invest. I doubt Doge is going to get ever to $1. But anyway, okay. I could talk to you guys all day long. Anyway, I'll be on Around the Blockchain. Till next time.